What's up, mortgage coach community? Sitting down. God, this is the third time in less than 2 months with Todd Ballenger. How lucky did I get to get the professor 3 times in 2 months?
We got to figure out what's causing this.
I know. Good things. Well, I think what's causing it is we're seeing a real acceleration in the movement of loan officers that are like, I need to be an advisor. And we're seeing an acceleration and I need to work with advisors, so it's not like they're leaving realtors, but I do think there is a clarity that if I'm not strategically and thoughtfully and intentionally working with asset advisors, financial advisors, that I'm leaving some opportunity on the table.
Well, yeah, I'm hearing consistently right now that, if you've been dealing with an existing book of business, that refi business has been pretty awesome, right? And now everyone's starting to transition back. And who are they transitioning back to calling on? Realtors are just getting worn out, right? They're getting these calls and everyone's calling them again to work with them. And some people didn't stop doing that, but a lot of people just got really busy. Maybe they didn't pay close attention to them. And now there's 6 people sitting out front in their office with roses and candy and everything else. And you got to start thinking about other channels of business. So certainly working with advisors is another sort of a non-crowded opportunity right now as well.
So guys, over the next 20-ish minutes, we're going to give you some really clear how-tos. You're going to get some principles and concepts that are going to help you work with advisors. Todd is not, he has a platform called the Certified Liability Advisor, BSCLA. We'll tell you how to sign up for that. We'll put a link down below and Todd will share that in a minute. So you're not going to get all the secrets of his training, which is a several week, as far as I'm concerned, college level training. Todd is a college professor at University of North Carolina. So he knows what college level training is, and he's done his best job to give loan officers a college level class in becoming a certified liability advisor. Before I hand it off to Todd and do the whole how and why, I do want to pull from a message that I got from Jason Mitchell, who's the #1 lending team in America. He was at Renee Rodriguez's Amplify a couple days ago, last week in Vegas. And from stage, he cast a vision how it's harder than ever for realtors to get to the consumer first. And he made the claim that the future of getting to the home buyer first is search and lending. Like search is obviously killing it. Zillow, Redfin, killing it. And lenders are getting there before a lot of realtors. So you got to remember, real estate agents are having a harder time getting to the consumer first. And then I also some highlights from a Tom Ferry. You guys know who he is. He's the biggest coach in real estate. And he's talking about how literally the way he sees it is 3 to 5 years from now is 30% of that real estate agent commission is going to a platform. So all these iBuyers are coming in, iBuyers are coming in. And so real estate agents, it's not a question of, is this happening? It's not crystal ball forecasting. It's happening. Real estate agents are paying a percentage of their commissions to Zillow and iBuyers, and their commissions are shrinking. It's happening. And it is harder for them to get to the consumer first. So with that said, I'm going to bring in Todd, who is not competing with platforms, who is getting to the consumer first. CPAs, financial planners, life insurance, advisors. Guys, they're still getting to the consumer first. They're not getting, and I don't want to use the word disrupted, although it gets used a lot. And we might look back 10 years and say realtors got disrupted, but right now they're just not getting to the consumer. So it's never been more important, if you're a referral, you're local, and you want to have this next decade be better than last decade, that you're smart. You know how to build a relationship with a CPA, financial planner. And you also need to know how to distinguish the difference between a fee-based planner, someone who calls himself a financial advisor, but really they're a financial product salesperson. So with that said, Todd, I feel like I've teed you up. Why don't you kind of go into professor mode and share your why, and then share some hows.
Yeah, yeah. So just commenting on some of the things you said there, everyone is being disrupted right now in some shape, form, or fashion. And the advisors are being disrupted through what's called robo-advisors and automated platforms. But what's really interesting is if you look at that, if you take every robo-advisor platform right now in the industry, it's around 0.3% of all assets are being managed through those platforms. It is a tiny, tiny fraction of the whole. Even Robinhood, who just went public, which is a very disruptive trading type investing platform, almost half their revenues were crypto related. So they're not seeing the direct disruption right now in the same way that other industries are, like real estate, where there's so much margin that's there to kind of be grabbed, as you were mentioning. And I'm aware of 2 or 3 companies right now that are looking at SPACs and direct IPO type listings that are going to be coming out in that particular space. So I love the advisor. We're all going to get disrupted in some shape, form, or fashion. A lot of that it's very important to look at the dynamic of what you're doing to see how likely you are to be disrupted. But let's talk a little bit about advisors.
And before you do that, also remember, guys, we gotta do what Amazon, Zillow, and disruptors can't do, and that's, one, be a great human being that truly has a heart to help people, and then 2, find out what that family's story is, their hopes, dreams, their goals, and put it together in a comprehensive fashion. That's gonna, I mean, maybe someday, there's robots that can do what a human being can do, but we're pretty far out from that. So rock it out, Todd.
Yeah, man. If you go, like, this is why I say, at the end of the day, you want to be a teacher, because it is the #1 safest job in the world right now that is least likely to be disrupted by robots, AI, or anything else in the way we think about traditional education teaching. I want to just, when I talk to people and people ask about working with advisors, there's a real misunderstanding about what that really means. So I break it into 3 distinct groups: the agent, the accountant, and the advisor. And I'm going right to left because when you think about these referral sources, and you hit it right on the head, Dave, that is, understand the hip-mind nerve. The hip-mind nerve is, there's this thing that's called your wallet, and that wallet gets fed through compensation. And one of the most important components of understanding these 3 different groups is understanding how they get paid, specifically how they get paid over time. For that reason, when we first start teaching people to work with advisors, the first thing we ask them to do is start with agents. Those would be life insurance and direct compensation, property and casualty. Anyone that typically has an agent in their title is going to be much simpler and easier to work with, because the compensation model for them is very straightforward. It's clear. It's cash flow oriented. It's target premium driven for what they're trying to sell. Then you move into working with accountants, get comfortable doing that, spend time, learn how to do that. And then 3rd phase is the advisor. We find that most people, when they start hearing go work with advisors, they actually go right to that Merrill Lynch office or one of those big wirehouse type firms, an Ameriprise office, and they want to talk to them, and they have no idea how to do that. And all they end up doing is fumbling on the 5-yard line and losing a really big opportunity that could have been something that was really meaningful to them down the road. So, right, you want to take the time, learn the basic skills, and work your way up the chain. Now, why do you want to do that? And why would you want this particular group? And you mentioned earlier, we started out talking about realtors. So this is just through some of our own research. And what I want you to think about here is that in the United States, from an addressable real estate market and realtor market, there are about 2 million licensed realtors. That includes my wife, who hasn't sold a house in 16 years, right? But she still keeps her license active. She'll still make a referral here and there to a friend that's in the business, and she'll be able to get a little compensation. But you've got a varying range of realtors. But if you look at the existing home sales last year, 5.3 million, and new homes about 682,000, you got about 6 million homes being sold a year. Now, I'm going to be real conservative here. 31% of those we know are first-time buyers. 69% are experienced buyers. Only 88% of the homes sold used a realtor, either a new or existing. So If I said 100% of all homes sold in the United States were sold by a realtor, and you just add up the total homes, you've got about 6 million potential clients, addressable, a max annual touch. When in reality, we know it's probably closer to 80% of that, right? Closer to 5 million clients. And that's an annual touch, which is really not an annual touch because most realtors don't follow up with their clients annually. They sell the house, it's a transaction, it's over, right? So if I assume that they touch the client every year that they sold that house to that client, you're still talking about, again, a max of 6 million touches a year, about 2% of the population. So I want you to contrast that with the advisor market. And when you look at the three A's there, right? The agent, the accountant, the advisor. First off, we know there are about 1.85 million agents. And these are people, again, they're the State Farms, they're the Northwestern Mutuals, the New York Lifes, all of the folks that move into an enrolled agent from an advice standpoint when it comes to insurance and those transactions. And the average agent is doing around 2.5 transactions a month. Now, if I go back over here, if you go to the NAR data, the average realtor is selling like 2 to 3 homes per year. And that's skewed by the fact there's so many realtors that aren't really active professionally. But if I go into the life and the agent market, an average is 2 to 2.5 transactions per month. If I look at the accounting side, and you have enrolled agents, we talk about this, the difference between an accountant, a bookkeeper, and a CPA, a certified certified public accountant. Sorry, I forgot what CPA meant for a second. You got 1.4 million of those characters, and they have about an average of around 100 clients. Now, a big CPA firm, we just talked to one of our recent graduates recently, was talking to a firm, and the first thing they did is they talked an existing relationship. They had about 735 clients, right? So that would tell you right there, that's a larger accounting firm, right? Their clients, their groups have thousands of clients and some that just have a couple of hundred. And then you've got your traditional advisor. And in that world, we're talking about FINRA type advisors. There are around 600,000 or so that can work into that FINRA type classification. And a lot of those fall into financial reps, like those are people that work inside large firms like a Schwab. You've got the wirehouse firms, the UBSs, the Merrill Lynch, the Wells Fargo, the Morgan Stanleys. You've got high-end insurance agents, and they fall into this grouping because they tend to be duly licensed. They'll have an insurance license and a securities license. You have independents. Those are RIAs, registered investment advisors, CFPs, chartered financial planners, and those tend to often work with the LPLs, the Cambridges, and those types of groups. So just, again, there's a whole, let's just call it an ecosystem here of folks that fit into these markets. But look at the number. First, you got about almost twice the addressable target market, right, compared to the 2 million realtors. And we all know if you call them a realtor, you've got to, if you take the actual active realtors, it's in the 600 to 700,000 realtors annually that sell at least one house. It's a much smaller number. But here you got about 3 to 4 million people that are actively engaged on a day in, day out basis. And then look at the target annual touch difference. Because if you're doing 2.5 transactions a month, that's around 55 million potential clients out there. In the accounting space, around 143 million clients use accounting and accounting related services. Around 60 million clients in the financial advisory space. So if you added all those up, that's 258 million possible touches. And there's some overlap, but there's not a lot of overlap with an agent. A financial agent who's doing a life insurance policy may touch a client that overlaps with a CPA, but it's a different relationship. And they may also have a financial advisor. And that's what I mean that's so powerful about this overlap is that when you talk to someone and you meet them through an agent referral, it doesn't preclude you from building a relationship with that client's CPA and the financial advisor. If you happen to meet someone who's an Ameriprise advisor and they refer clients to you, those clients also have relationships with life insurance agents and accountants. They're there, they've always been there, We just aren't trained to look for them, because if we think we are lenders selling money for purchase transactions or selling money for refinance transactions, our optics tend to be geared towards realtors and existing customers, not this incredible ecosystem that's around you that's engaging all of these other financial transactions. So let me kind of stop there for a minute, take a breath, but that's a very important thing to think about when you're thinking about, is this something I even want to do? Forget about just the stuff you learn for your own personal financial well-being, but as an addressable market.
So I want you guys to think about that. We're in the mortgage space, and start thinking about, what we control, how many of us are there. Well, there are hundreds of thousands of licensed MLOs in the country. My guess is there's only 150-ish that are referral based, local people that you're competing with. Like if you tune into the Mortgage Coach YouTube channel, you got 150,000 competitors, and maybe it's 180, maybe it's 130. But that's how many competitors you have. And guys, when you look at the mortgage space, that we know for sure there's over 18 trillion in home equity. We know for sure there's over 16 trillion in mortgages, just call it total. We know for sure there's about 49 million households that use a mortgage to have home ownership. And so there's a massive opportunity. And, my goal at Mortgage Coach is to make you one of a mortgage coach, be the captain of the wealth team. And so that the CPA, the financial planner, all the different people that Todd just laid out, you quarterback that on behalf of a family. You are able to be a liability advisor, certified liability advisor, and you can refer, and you can collaborate, and you can network with these folks, and not just at a referral level. I'm talking about at an advice level. So anyways, Todd, I was actually taking lots of pictures and screenshots. I hadn't seen some of those numbers. So thanks for kind of laying out the why. I think the why is pretty obvious to anyone that watched this so far.
Thanks, man. And, I'm going to reinforce, if you're familiar with a concept called reticular activation, it's, maybe you have a thought you want to buy a car, right? And then you decide, I want a Toyota. And then you decide you want a Toyota Highlander. Then you think, I wouldn't mind a white Toyota Highlander. Isn't it amazing how you start to see white Toyota Highlanders? They're coming at you in traffic. They're at a stoplight. They were always there, right? You just never saw them because you weren't trained to focus on them. And that's one of the things, in a way, I feel like coming into this industry, we're trained to think about what we do in a particular way that just really limits the opportunity that's out there. Once you start thinking about it and looking for it, you're at soccer games with your kids and you meet a guy from Northwestern Mutual, or you're doing something at your church and you realize you're sitting next to an accountant, and suddenly a whole new conversation starts to emerge that wouldn't typically have happened because you're starting to train yourself to think differently about what you do. And we're all in the financial game, right? We have not only mortgages ourselves, we have IRAs, we have 401ks. There's a tremendous opportunity there to do that. And, people often ask, how do you do this? Okay, I get it. There's a big why here. How do I do this? And I'm gonna give you just a couple of simple things that you need to really understand. If you could just do these three things, you can immediately start to build some relationships. But you got to think about, again, what is it that I do differently? And we talked about this a little bit, Dave. I know in another conversation about moving away from selling products to solving problems. But specifically, financial advisors believe you're a problem in some cases if they perceive you as someone selling debt to their clients. And I can't stress this enough. Many advisors, their initial understanding or thought about a mortgage lender is just that. You lend my client money, you sell them money, you put them in debt. That's something I have to overcome longer term. So one of the first things that we did is we helped them to understand, right? Like what we do is we don't sell money to someone to indebt them. We give them an opportunity to buy a house now, because if they wait, it's going to cost them more money. They can't save fast enough to address the problems with housing appreciation and everything else. So we're actually saving them money. And more importantly, we have the ability to help the advisor solve old problems in new ways. And we talk about this in the course. There are about 16 major problems that people have in their lifetime, financial problems that address the majority. And most of those are tied to about 6 or 7 life events. Like if I have a child, that's a cool thing, but it creates as a life event, a series of new problems that need to be addressed. Could be life insurance, could be saving for college. It could be additional cash flow drains on current income, right? Retirement, that's a life event, but with it comes a whole new series of problems that that advisor has to solve. They're aware of these life events, right? And they're aware of the problems. What they're not aware of is that as a liability advisor, I can help them solve those existing problems, the ones that they've always solved. I can give them totally new ways to address and solve those problems, such as providing an equity line of credit to fund up 4 years of college on a mortgage that's largely paid down, or a house that's really greatly appreciated. A reverse mortgage, for example, as an income source in retirement, consolidating debt to free up cash flow to support a new child being born. Life insurance that provides an immediate estate. Now, I'm not providing those subjects, but the life insurance agent needs cash flow to be able to solve the problem that their client's been presented. And they would refer to us because we could find the cash flow through debt consolidation, through refinancing, through a number of different things, moving them from a 15 to a 30, whatever, to help them find the cash flow they needed to solve those problems. So one of the first important things you have to do is learn how you're solving problems and how to communicate how you solve problems to those potential referral partners.
So Todd, we wanted to kind of keep this close to 20-minute briefing. Do you have any more slides when it comes to how, the how?
Yeah, let me, I'll switch over to another deck here. And,
I was, by the way, just so you know, I was kind of going like, hey, let's take it down and let's talk it out. Or do you have slides on how? So I just, if you do, let's get after it. And if you don't, let's talk it out.
Yeah, no, so the second thing, so there's, again, the how, this is something you learn to do, is you learn to connect those problems, right, with solutions that you have available. Now, how do you do that? Well, one of the most important things that we learned, and this is, one of the core models that you have to understand, is that advisors, they interview their clients, they have a conversation about their needs, and they present specific results. So one of the things that we would do is we would ask, what's a problem you're solving right now for a client? Give me one problem you're solving today. You had to have had a client today that had a problem, right? And they'll say, yeah, I had this lady that just came in and she's getting divorced. Okay, what's the problem? Well, we're trying to figure out how we're going to address the asset disposition. Now, great. Does she have a house? Yeah. What's she going to do? Is she going to sell the house, keep the house? You're going to buy a new house or whatever, right? So immediately you're into a conversation about the problem they're solving and how you can help them solve it. But we always mirrored the same model of how they presented, meaning I'm going to have an interview with you. I'm going to have a conversation with you or with your client, and I'm going to provide you results. In other words, I'm going to give you something that's visible and valuable that can show you what I can do for you. So maybe they say, well, I think one idea is she would sell the house and take the proceeds, buy a new house, maybe put down 20% or something, and then we put the rest in her investment portfolio. Great. I can model that for you. Let me show you how. Tell me what you want me to model. Another option, she keeps the house, we refinance it, we pull cash out, and that money goes into a side fund to make those mortgage payments while she gets retrained in a new career, which might take a year or two. No problem. We can show that money coming out of that money that she pulls out of the house, going back into the house to pay the payment. You can do that? Absolutely, right? So you're learning how to connect their problems with solutions, and you got to be able to present in a clear, professional way. And you got to be able to show that you can have a conversation with them, which you're modeling by just doing it. And then you have the tools, in your case, right, Mortgage Coach, to be able to present those results that show them that there's visible value to being in a relationship with you. Lastly,
Love it. I'm having some technical issues, Todd. So I don't know if you're seeing me on my camera. I'm going to try to reboot some stuff, but keep going. And then guys, if you do have any questions, put them down below.
Yeah, I see you, but you look like you're in the Matrix. It's got a little cool thing like that.
I'm going to kind of reboot a few things, but just keep it rocking.
Yeah, well, we're pretty much done. The third thing is the last thing. So what are you doing? I'm solving old problems for the advisor. How do I do that? Give me a problem. I'll show you some ways that I can potentially solve it. I'll present to you. And if I present to them like a pro, the first step is, wow, I wouldn't mind putting this person in front of my client. This man or woman is, they seem to be okay. And the third thing you have to do is minimize their risk. In other words, their biggest fear in working with you is if you can solve their problems, they want to work with you. And if you can present like a pro, they realize that there's value that can be communicated. Their fear is that you're going to make them look bad. So one of the most important things is learning to build that relationship with them and show them the visible value, how you can present like a pro. And in doing that, help them understand that the last thing that you're going to do is make them look bad. And we say to people, if you put me in front of your client, or if you give me a problem to solve, I'm going to solve it for you in a really cool way. And I'm never going to make you look bad. We would literally say, I will never make you look bad, Rick. John, I will never make you look bad. Sally, the one thing you can trust is I'm never going to make you look bad, right? Bad things may happen. The appraisal may not come in like you want it, stuff like that. But I'm going to always make you look really good. That is such an important understanding to have, because they won't tell you that I'm scared to work with you, because what? I've already got my 1% a year coming in, or I've got a $500,000 commission on this giant key man policy I'm writing if you can help me solve this problem, right? I don't want you to screw it up. And there's fear there. And you have to be able to address that. Just like, with a realtor, right? Same thing. They're going to say, gosh, if I refer this loan and you blow it, I'm not going to get my house commission. That kind of stinks. There's trust that gets built up. But initially, once you can connect the problems with what you do and the fact that you're not going to sell them a bunch of money they don't need, you're going to help them solve these real financial problems, then guess what? You just got to show to it that you're not going to make them look bad. And then once you've had 2 or 3 good transactions, you make enough emotional deposits in their bank account that you can have stuff go wrong. And we have a whole model, we call it the FAST model, which is how you do that. But it's really important just to understand initially, keep saying to them again, let me work with you. I'm going to make you look great. I'm never going to make you look bad. I'm going to take really great care of your client.
If you could stop sharing real quick, Todd.
Yep.
All right, guys. So let's summarize a few things and let's make a few things crystal clear. So when it comes to how, it's solving problems in a new way. And being a certified liability advisor, being a mortgage coach, that's new for most financial advisors. They have not seen a loan officer that can, let's put the data together, liabilities, mortgages, car loans, credit cards. Let's optimize those over time. They're not presenting like pros. Average loan officers can provide a fee worksheet. They're not providing a total cost analysis. They're not showing a move up analysis. And things like, there's a lot of families that will move up and it's like, should I move up and pay cash? Should I move up and take $100,000 out of my asset account as a down payment? Or you know what? Should I move up, get the biggest mortgage I can get and invest the difference? Loan officers can't answer that question. Mortgage coaches who are certified liability advisors can answer that question. I do want to consider something added to your script when it's about minimizing risk. I will never make you look bad. And I will always help your clients build wealth faster. And I will always make you a hero in the eyes of your clients, because for the first time in their life, they're not just looking at a mortgage as debt, they're looking at mortgage as an opportunity it's a financial planning decision. So you're turning that financial advisor, you're reducing risk, because let's face it, like I'm dating myself a little bit, but when I used to go and meet with CPAs and financial planners, I'd walk in with the sports page and I would just say, hey, this is how your families are getting mortgages. And back in the day, anyone who knows, sports pages were just full of mortgage ads. Now I probably would reference Zillow and not going to mention online brands, but online brands, that's how they're getting mortgages. And they're heck, if they say the word mortgage in their house, they're getting mortgage ads with people that want to sell them money and don't know how to help them build wealth. Well, I'm different. I'm a certified liability advisor. I'm a mortgage coach. I'm never going to make you look bad. And I'm always going to help your clients create wealth faster. And I'm going to do that in a way that makes you a hero. So that's my script. You guys make your own script. Todd, you killed it, dude. You gave some really solid whys that I don't care who you are, you got value from that. And then you gave 3 solid hows. Now, remember, guys, within those hows, it's not that easy. They're 3 bullets, but there's a lot of training that goes into that. And if you're on the mortgage coach team, we do training every day on that. But Todd, for anyone that wants to go the extra mile and really go through your college level course on being a certified liability advisor, how can they sign up and what should they do?
Yeah, just go to borrowsmartuniversity.com, borrowsmartuniversity.com. There's a lot of great information there, and you can sign up and get access to the course immediately.
Yeah, it's $1,500. Now there is a discount code. If you're a mortgage coach, it is MCVIP.
You got it.
Important person. You're a mortgage coach, very important person, MCVIP. Put in that discount code, it saves you $500. So it's a third of the price. For $1,000, you can learn all this stuff at a college level. How much content is it? How many weeks of learning?
24 modules, so you can work as fast as you want. We've had people get through it in 5 to 10 days. They just got into it and started watching a couple a day. Some people like to take the exercises and take a course and then do the coaching session and kind of implement that, then do the next one and implement along the way. So it's up to you. You also get a copy of the book. You get access to an audiobook version of me reading it, so you can listen to that while you're working out or walking and stuff. So there's a lot of other content, and just about every single course or module has resources that you can utilize where we take you through step by step how to use these things to build these relationships. And again, more importantly, do it for yourself. Just learn some of the financial concepts for yourself, and you'll be more likely to want to share that with your customers and build relationships with advisors.
Right on, brother. Well, hey, I appreciate you with the mission. I'm on the mission to change how people get into debt in America, and to do that in a way that turns loan officers into heroes. I want loan officers to be the captain of the wealth team, the most valuable advisor any family ever has. So guys, this is, just call it an upgraded college level course. Not everybody wants an MBA. Not everybody wants to get a doctorate in anything. But guys, this is like an MBA in mortgages. And if you do want to work with CPAs and financial planners, to me, it's a must have, so check it out. Go to the link. We'll put the link down below. Todd, thanks for always being a leader and a professor in our community. And I appreciate you, brother.
Thanks, man. Good to be here. Take care.
All right. Take care, dude.